Hello, ladies and gentlemen. My name is Michalis. Good afternoon to everybody. Today, we're going to be looking at scalping methodologies and specifically scalping for intermediates. We've had a lot of live sessions this week. We've had a lot of webinars. It's been an amazing week. Probably everybody is as tired as I am because, of course, we've had a lot of volatility. There was a lot of opportunities within the market, and there's been very, very long hours of trading, even overnight, for a lot of us. Now, for our beginner traders and for traders which aren't quite intermediate, we've had a lot of individuals come and email me. Actually, most of the emails were today. And they said to me, I've registered for today's webinar, but I don't know if I'll be classed as an intermediate. I do have some experience and I'm getting a good understanding. My success rate is slightly improving now, which is great to hear, guys. But I wouldn't say I'm an intermediate. I wouldn't say I've been trading 12 months, for example. So I wanted to reconfirm to everybody, when we are saying scalping methodologies for intermediates, is that it's not a beginner's webinar. It's not we're going to go through what scalping is and every little basic factor of scalping. We're going to concentrate more on going straight to the strategies on today's webinar, because we do have webinars where we go through 45 minutes. Webinars are 45 minutes. For 45 minutes, we'll go through and say to everybody what is scalping, different examples of scalping, techniques, what we need to be careful of, advantages, disadvantages, and so on and so forth. So we're not going to do that today. We're going to concentrate more on strategies and go straight to looking at charts, which I prepared to look at certain strategies. But these strategies can be used by beginners, so somebody trading only a couple of months, for example, because it is definitely something. I did want to develop strategies and something which can be used by all levels of traders. Now, keep in mind, though, ladies and gentlemen, that this webinar is here for general marketing communication for information purposes only. It's only here for educational purposes. It's not independent investment research, it's not investment advice, it's not financial advice, it's not trading advice. So this isn't the purpose of today's webinar. Of course, what we do want to do, though, is make sure everybody has knowledge, is able to get that knowledge, is able to get those that material and that information that they need to get a good understanding, to know what to be careful about, how to potentially look at opportunities as well. So this is something which is very important to me. But of course, even though I'm a financial advisor by license, I'm not here to give financial advice. And to be honest, it's impossible for me to give financial advice because, guys, I don't know anything about people watching today's webinar. I don't know you personally. We've never spoken, so you cannot give financial advice like this. Now, doesn't mean, ladies and gentlemen, you cannot get financial advice if you're trading. If you're trading or thinking about trading, but you want to be sure, you can seek independent financial advice. You can go to a financial advisor, pay them and say, look, before I start doing this, tell me, should I be doing it? How should I be doing it? How much should I be investing? You can seek financial advice, but we're not here to give financial advice. This webinar is here for educational purposes. A little bit about my background. I've been in the financial trading market, financial service market for almost 11 years. It's been more than 10 years. I've been for 4 of those years as a financial advisor. I do hold 2 licenses as a financial advisor, one in the UK, one in Cyprus, where our head offices are. I don't want to spend too much time looking at information about me, because a lot of people probably have watched previous webinars as well. And also, knowing about me isn't going to make you a successful, profitable trader. The only reason I have that there is because I do think it is good to know about the individual who's providing you with this information. Because I always say to individuals, if you're watching influencers and watching people on YouTube and so on and so forth, I guarantee you they're not licensed. I guarantee you they're probably not profitable most of the time. So you have to be very cautious. And this is one of the reasons why I say to people, you know, I'm a licensed financial advisor. It's very, very important. So why scalping? And what do scalpers say? One of the mottos of scalpers is small profits are easier to achieve. Somebody here I can see is saying that it's very slow responding. What I will do, guys, is I'll take the webcam off because everybody sees me every single day that we have live sessions and webinars. So someone said here that it's really slow loading and I keep pausing and freezing. So hopefully now that I've taken the webcam off, hopefully it's better for you guys. If that bothers you guys though, of course I can put the webcam back on. But anyway, hopefully that helps that individual. It's actually a lady. That lady stopped the freezing. Most likely it's because of internet purposes. So the first thing that scalpers say, one of the mottos that scalpers say is that small profits are easier to achieve. A lot of things they say as well are things like if you're in the market for a limited amount of time, there's less risk. The longer you're in the market, the more the risk is. The more you're looking at to achieve, the higher the risk is. The more profit you're looking to make, again, the higher the risk is. So this is why a lot of the time people prefer scalping. Scalping can be very difficult if you're trading real underlying assets itself. Whereas if you're looking at trading CFDs, or it doesn't have to be a CFD. It could be a spot contract, it could be warrants, it could be futures, it could be options, whatever it is. There's benefits to doing so when it comes to scalping. Now, scalping is a day strategy, but it's also known as ultra short term. So you're looking to close trades in the ultra short term, but you never keep trades open more than a day. The aim of a scalper is to earn a small number of profits with lower risk levels and within an ultra short period of time. Now, somebody may say, you know, what does that mean, ultra short term, in terms of my trades? It means you open a trade, guys, and maybe in a few seconds you're closing it. Maybe in a few minutes you're closing it. At a very max, you may be keeping it open 10 minutes, maybe 15 minutes. I have seen scalpers keep them open for up to 20, 25 minutes. But traditionally, you're just keeping trades open for a few minutes, ladies and gentlemen. For example, 3 to 5 minutes. This is what we're referring to as scalpers. So scalpers prefer to open small multiple trades instead of opening one larger trade. So don't think, ladies and gentlemen, because scalpers are not looking for a very large trade with a very large profit, that they're earning less. No, we could have one individual. Let's get a pen out. We could have individual A, for example. Here we have individual A. He's opening 2 trades, and each trade he's looking to have a profit of $50. Okay. So in total, he's earning $100. And then we've got individual 2, who may be a lady, let's say. She's opening 30 trades. They're much smaller trades. And per trade, she is looking to earn not $50 like the individual up here is looking to earn, but she's only looking to earn $5 per trade only. Again, this is an example, guys. Some people may be much lower than this for some people may be much higher than this, but it's just an example. So she's actually going to earn $150 US, ladies and gentlemen. So it doesn't matter that individual number A is open a large trade with a large take profit. It doesn't matter. This individual is just opening smaller trade sizes, but many trades with smaller profits. So at the end of the day, which is the main thing, you can still be as profitable, you can be even more profitable. That's down to you and the statistics behind your trading. Things like how many trades are you opening, the trade size, your success rate, your reward to risk ratio, looking at these things, ladies and gentlemen. So scalpers are more active throughout the day and tend to stick to one asset. Guys, it's very, very, very important. If you're scalping, it's important to stick to one asset and to always be trading in the same hours of the day. I say to people that are day traders and session traders and swing traders, there's benefits to sticking to one asset, but it's not a must. If you're scalping, it almost is a must, because scalpers, they need attention to detail, they need knowledge, they need to know the ins and outs of that asset in order to trade with such fast, short-term trades. So it's important to be trading that one asset and in that one trading session. Scalpers mainly use time frames between 1 minute to 10 minutes, but of course you can use other time frames as well. Scalpers at all costs avoid overnight fees. They tend to trade the assets with the lowest spreads possible. Volatility is also vital for scalpers. So if you're seeing a market which has no volatility, it's very, very difficult to be scalping, if not impossible. Now, most people are going to say, what asset has the lowest spread? Guys, the asset which has the lowest spread will be the most beneficial for you. The asset with the lowest spread is the euro against the US dollar. Alternatively, you can look at the euro against GBP. Alternatively, you can look at GBP USD, which is also known as the cable. These are the assets with the lowest spreads, ladies and gentlemen. Let's move over to the next slide. A scalper's must list, lowest spread possible. So even if you're sitting there and saying, oh, I love trading gold, I love trading gold, I'm very passionate about trading gold, but you're looking at gold and the spread is 5 times higher than the Euro USD. Is it worth it? I understand you love trading gold for whatever reason, but the main thing is that you're a successful trader. That is the main thing. And to be a successful trader, especially if you're a scalper, the lowest spread possible is extremely important. It is extremely, extremely important. We also have a lot of people, for example, in Africa, in Asia, in Turkey, they like exotic currency pairs. Also in Latin America, they like the peso. Again, if you're scalping, that will be very, very difficult. So, guys, avoid being vain, avoid trying to just trade what you know. You need to, if you want to be scalping, you need to trade something with the right characteristics, even if it's something you've never traded before. It's better not to trade scalping and stick to those assets that you want to trade, or if you want to start scalping, use an asset that meets the criteria. Trade 1 to 2 assets, but guys, scalping is almost definitely needs to be 1. Only keep to 1 session. Avoid the news, ladies and gentlemen. You definitely need strict exit and entry points. Always stop loss, take profit. When you're looking at scalping, that's very important. Guys, if you don't want to use a stop loss and take profit, that's absolutely fine. But I need to really stress the importance of strict and quick and early entry and exit points. The exit, whether it's a take profit or stop loss, and the entry, whether it's a market order or pending order. And with scalping, you need to be very strict. You need to be very disciplined, and there needs to be no exceptions. So, ladies and gentlemen, what can you do to help you analyze scalping using the scalping method? The first thing, ladies and gentlemen, is the currency index. If you're trading a currency pair, like for example, we looked at the Euro USD, as well as with the lowest spread, then also keep an eye on the Euro currency index, so basically the Euro X, or the US dollar currency index, which is the USDX. That's very important, because if you're speculating that the Euro USD is going to increase in value like this, but if you look at the euro against the pound, the euro is down. If you look at the euro against the pound, sorry, if you look at the euro against Japanese yen, the euro is down. If you look at the euro against the Australian dollar, again, the euro is down. The only thing is up against is the US dollar. Are you really comfortable to speculate that the euro is going to keep on increasing against the US dollar? Because the US dollar, the euro is doing terrible against every single other currency. So that's why it's important to also take into consideration to use the currency index as well. That's important. And then if you're not trading currency pairs, let's say we've got individuals that are trading the NASDAQ, S&P 500, the DAX, generally speaking indices, because we've got a lot of people that trade indices. Then, ladies and gentlemen, you can also take into consideration components, index components. And I'll give you an example of all of these. I'll give you an example of them. The other thing you can do if you're looking at stocks or indices is you can use the VIX and the high-low index. So let me give you an example of these, okay, on how you can access them as well. So hopefully everybody can see my screen. So US dollar index, everybody can get access to it. So for example, if you go to Market Watch, you've got the US dollar index, you can see it's 0.20% down today. You also have a chart here. If you go 5-day charts, you can see that big shoot upwards yesterday as well. So this is how you access the US dollar index. Now let's say we're trading the NASDAQ, we can look at the NASDAQ components. This is what I was referring to, the NASDAQ components. So what do individuals do? If they want to speculate and scalp that the price of the NASDAQ is going to increase in value, they want to see the most influential stocks are performing well. So for example, it could be the top 10 stocks, it could be the top 15 stocks, it could be all stocks that hold 1% and above, so basically the top 24 stocks here. And they'll say how much of those stocks are increasing in value. So for example, from the top 10, 2 are decreasing in value. So 80% are increasing in value. So because 80% are increasing in value, it kind of gives me that signal, that go ahead, that I can take into consideration the NASDAQ, scalping the NASDAQ to increasing in value. If 80% of those were red, then of course it's a completely different scenario. Then I've got to go ahead to speculate the price is going to decline. But we need a large percentage. It doesn't, you know, if we've got 55% increase in value, it doesn't tell me anything. If we've got 60, again, it doesn't tell me anything. It needs to be a significant amount. For example, 65, 70, 75, even better, guys. That's what we're looking for. And then, ladies and gentlemen, we also said the VIX. How can we use the VIX? Let's go to FinViz. Go to performance. Go to futures and performance. And here you can see the VIX. Look at the VIX here right at the bottom, minus 1.82. Now, if the VIX is increasing in value, it indicates that the risk appetite of the market is declining. So people are more scared and a lot more cautious. So stocks are likely to potentially decline. If the VIX is declining, it indicates that the risk appetite of the market is increasing in value, and that can be positive for stocks. So for example, if I look at this week, the VIX, ladies and gentlemen, has dropped by almost 24%. 24%. If anybody looks at the NASDAQ and S&P 500, they'll see it's at an all-time high. So you can see exactly what I'm referring to, ladies and gentlemen. Now, the high-low index, you can also use. The high-low index is very simply the percentage of stocks at an all-time high, percentage of stocks at an all-time low. Sorry, 12-month high, 12-month low. that can also help with analysis as well, because it shows market intent, emotions, and sentiment. Now, due to the nature of scalping, all scalpers have losing trades, but incorporate this into the reward to risk ratio. Negative reward to risk ratios are less common among scalpers. You can see them with swing traders, you can see them with day traders and session traders. With scalpers, though, it's less common. So let's start looking at the scalping method one. We're going to look at two methods. We're going to look at method one. As a start, and you can see the 3 moving averages I've got on my screen. I've got them written here. So the 200 bar simple moving average, the 15 bar simple moving average, and the 8 bar exponential moving average. This is a 15-minute time frame, and it's the Euro USD. We're going to start with the 15-minute time frame, but then we're going to switch onto a 1-minute time frame, which is a key time frame for scalpers, ladies and gentlemen. So the first thing, if we're below the 200, it's very simple. We're below the 200 like we are here. We speculate downward price movement. So we're only looking at opportunities to speculate that the price is going to decline. If we're above, though, like for example here, if we're above like in this area of the market, then we only speculate in upward price movement as well. Now, that's number one. Number two, we also need the RSI. We ideally want to be, when we speculate in upward price movement, between 75 and 50, so here. And if we speculate in downward price movement, between 50 and 25. Ideally, we don't want to be but lower than 25 or higher than 75, ideally. Now, ladies and gentlemen, let's look at where we have crossovers. So that's a signal. When we got the yellow, so basically the 8 crossing above the blue, that's a signal of upward price movement. But look what we're doing here. If we're above the 200 bar exponential movement, simple moving average, we're only taking into consideration upward crossovers. So we don't take into consideration this downward crossover. We don't take into consideration this downward crossover. Now, when we're below, okay, so you can see here we're below the 200 bar exponential moving average. We do not take into consideration upward crossovers. So this crossover, this crossover, this crossover, that crossover, and that crossover. We don't take those into consideration because it's in conflict with our 200 bar exponential moving average, and most likely will be in conflict with our RSI as well. So I've got a red line here where we have signals. Here we have a signal of upward price movement. It did indeed move upwards. Keep in mind with scalping, we don't need it to move upwards much. We just need the small price movement. Most scalpers are trying to earn 0.5, 0.6, 0.7, 0.8, 0.9. That's traditionally, and to be honest, 0.9 is rare. That's traditionally what scalpers are looking for. Now, here we didn't get a crossover on the 2 moving averages, but we crossed below the 200 bar simple moving average. So that's a crossover as well. You can see here we're not above 75. Also, you can see here we're not below 25. Then the next crossover downwards is here. Again, we're not below 25. The next crossover is here. Again, we're not below 25 as well. This is a downward crossover. This is a downward crossover as well. Now, it doesn't mean that when it crosses over downwards, we instantly enter a buy or in a sell, or if it crosses over upwards, we instantly enter a buy. But what we do is we very simply just switch over onto another time frame. Okay, so I can confirm what signal this is as actually. This signal, ladies and gentlemen, is this crossover here. Okay, so I didn't choose the biggest crossovers. I actually chose one of the smallest crossovers. So I want it to be fair. So this is a crossover that we saw exactly on this line here on the 15-minute time frame. We saw downward crossover below the 200 bar exponential moving average. So it's on this green candlestick. So actually the candlestick and the price actually moves sideways with an upward tilt. So that wouldn't have been a great entry point for scalpers because for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes, it would have moved against us with no profit. Maybe would have hit our stop loss. It depends. So that's not where we would enter our trade. What we will do is say, where is the main breakout? It doesn't mean the main resistant level. We have to take into consideration the wick. The wick is all the way down here. I'm not putting it there. I'm saying this is the main area, because you can see it's mainly where we're finding support. So that's the area I want to cross over. As soon as it crosses over here, that's where it crosses over. Straight away, I'm speculating downward price movement as quick as possible. If I miss it and I'm down here, it's a no. You've missed it. You're not entering, okay, based on this strategy. Let's continue, ladies and gentlemen. So this is oil. Now I wanted to show you this as an example as well, because what I wanted to say is, here we said the figures are 215 and 8. It could be different. It depends on the volatility and the characteristics of the asset. So for example, here with oil, I'm using that setup, but this isn't a great setup though for oil, because it's a very different asset compared to, for example, the Euro USD. For example, you can see here we've got a downward crossover, but it doesn't move downwards actually. So keep in mind, guys, you may need to change the parameters until you find the parameter that suits that asset. So keep that in mind. Now, I wanted to show you another example, but with an example which isn't influenced by yesterday's elections, to be honest with you, because yesterday was a very easy day, straight one direction, very little retracements, very little volatility against the trend, and so on and so forth. I didn't want to follow that scenario. I wanted to give you an assets example as well, which is not related to the US dollar. So here I've got the euro against the British pound. So we're almost always below the 200 bar simple moving average here. Almost always below. So we're always looking for downward price movements, options to speculate. Here we had a crossover, here we had a crossover as well, and here we had a crossover. Then we had an outward crossover, we're not speculating. Then here we had a downward crossover. That's a massive price movement. Here we have a downward crossover, here we have a downward crossover, downward crossover, downward crossover, downward crossover. The only downward crossover which was terrible was this one here. Other than that, they were all 100% okay downward crossovers. But there is signs as well that we should have been cautious of this crossover. And also this crossover here, because this is the low. This is the low where the crossover is. So we're on a higher low. Then the next crossover is here, and we're on a second higher low as well. So we're actually forming what is known as a symmetrical triangle. Ideally, we want to see lower lows and lower high, so a clear trend. But you can see here I've got a red line on every crossover downwards below the 200 bar simple moving average. And I'll give you the example from 6:45. This was 6:45 yesterday. So again, I'm not using the biggest crossover. I'm actually using one of the weakest crossovers. It's actually this crossover here, okay? So you can see 6:45 yesterday. Go to today's charts on a 1-minute time frame. Again, you can see here 6:45. So that's where the crossover happened. The price moved though all the way up here. This is where I've got my breakout. This is where I've got my breakout, ladies and gentlemen. As soon as it crosses below here, at the point of the crossover, I'm entering into my sell trade. And it continues to decline all the way down to here. If it declines all the way down to there, that's a profit of 0.08. That's quite a lot for a scalper. Of course, after that, though, it did continue to decline, but it defeats the purpose of a scalper. A scalper, we're looking, ladies and gentlemen, to close the trade as quickly as possible. Like I said, 0.5, 0.05, 0.06, 0.07 is really traditional for scalping. So now we're going to look at a different method. It's on a 5-minute time frame. I've got my 200 bar simple moving average again. This is my 200 bar simple moving average. I've got 85, I've got 53, and I've got 13 as well. This is a simple moving average. These, though, guys, are exponential moving averages. How does this work? It's a 5-minute time frame. This is a NASDAQ. Now, if the price retraces, okay, and it's going to retrace and touch or drop below the red, like for example here, we don't take into consideration upward price movement, okay? So we've got no signal there. And there's a good reason for it. Look at this, down, up, down, up, down, up. So it's very volatile in both directions. So that can be quite difficult to trade and can be quite stressful for a lot of traders. So instead of doing that, we wanted to retrace, but to retrace into this area for a strong trend, or for a weaker signal to be between the red and the green, but not hit the red. Now, if we hit here, for example, we drop below the green, but not to the red, we count back 4 candlesticks. So we've got 1 candlestick, 2 candlesticks, 3 candlesticks, 4 candlesticks, and we use the highest level of those 4 candlesticks and we draw a line there. Okay, so this is our line. If the price, we're down here, we don't know that upward trend's gonna happen yet. If the price increases, as soon as bam, hit here and crosses above, we speculate upward price movement. And again, look at this lovely upward price movement, ladies and gentlemen. But of course, we wouldn't be trading all of that because we're looking for short term. This is another scenario here as well. Drop below into the yellow. So I count back 1, 2, 3, 4. The highest is here, ladies and gentlemen. So if we crossed above that, that's another trade, and we can keep on doing that again and again and again. Not all of those trades, of course, will be profitable. So for example, here we dropped to this level here. So we've got 1, 2, 3, 4 candlesticks. The highest levels here, we would have entered into the buy and it would have moved against us and it would have hit our stop loss. So keep that in mind. Not every single trade will be a profitable trade. The main thing is though that our success rate is high and we've got the right reward to risk ratio. That's the main thing. This is a downward price movement. This is for the US dollar against Japanese yen. So we want to be below the 200 bar simple moving average. You can see we drop back into that level here, for example. So we've got 1, 2, 3, 4. So the lowest, ladies and gentlemen, is here. And you can see definitely the decline after that. Then we've got another signal here. So 1, 2, 3, 4. The lowest from those 4 is here. Again, it declined as well. So this is something you can use. The only thing that I would start to say, no, I'm going to stop using it is, for example, here you can see we've got 3 higher highs. If we've got a higher high, then you can start to be cautious. It's actually good to start to be cautious if you've got higher highs. So we still want to see those lower lows, even though we're using this scalping strategy. We still want to see higher highs if we're looking at upward moving strategies as well. So that, ladies and gentlemen, brings us to the end of today's webinar. The last thing I want to do very quickly is just go to the MT5 and show you this in real life. So that's the last thing I want to do. Bear with me, ladies and gentlemen. So let's actually go for the first scenario as a start, okay? So I'm going to go to the Euro USD. There we go. Now we had a 200 bar simple moving average, so that's our red line here. Then we had the 15 SMA. So make this 15. And then this we had as 8, which is currently 8 as well. And we started on a 15 minutes time frame, like so. So, ladies and gentlemen, we just, so we're at that neutral level. I was hoping we weren't at that neutral level. Ideally, we wanted to be below, to be honest. So when was the last time we had a good scalping signal? The last time we had a good scalping signal here was actually on this decline here, ladies and gentlemen. We could also use it on this decline here, but not after this. Why not after this? Because after that, you can see we've got a low, then we've got a higher low. So after that, we wouldn't start to look at the downward crossovers. So the latest one that we could use, which is okay, is this crossover downwards or this crossover downwards. You can see this crossover downwards is between 25 and 50, so that's perfect. This crossover downwards is just below 50, so that's not a great scenario, but nonetheless, it meets the minimum requirement, should we say. But a better scenario is this, for it to be much lower. So that's a better scenario. So for example, me, myself, I'll be very cautious trading this downward price movement. But either or could have been taken into consideration. So let's now go to a 1 minute time frame. And let's go back. Bear with me. There we go. Let's go back. Back some more. There we go. So this is where we got our first crossover on this red line here. Now, where is the main area of resistance, of support? I would have said, because we don't know this level yet, I would have said that's the main level of support. And then thereafter, I would have said this is the main level of support. So you can see the price, ladies and gentlemen, we would have entered here and it's moved against us by 0.07. Then it started to move back into our favor, another support level was this here. So I would have entered, so far we entered one trade. Then as it crossed here, I would have entered a second trade. And then as it crossed here, I would have entered a third trade. And you can see it kept on declining all the way down to here. So the highest trade, we've got a profit of 0.09. The lowest trade, we've got a profit of 0.06. So 3 trades here. So you can see exactly how I'm doing it as well, ladies and gentlemen. Now, if we go further back, like I said, we had another signal. Let's see where that signal was. Where was that signal? Let's go to a 5-minute time frame. Now, did I get rid of them? I apologize. Let's look at them again. So we looked at this signal. Now let's look at this signal here. Let's go to 1 minute. There we go. So this is where we got the downward crossover. Where is the main resistance support level? Of course, it's this level here. As soon as it crosses over there, then we can speculate downward price movement. It's a very big downward price movement, almost 0.5%. Of course, you're not going to be trading all of that, guys, because we're looking at scalping. But you can see exactly what I'm doing here as well. So, ladies and gentlemen, that brings us to the end of today's webinar. Hopefully you found it educational and informative. If people have any questions, feel free to ask now. Otherwise, we'll end today's session. I'll leave a few minutes just in case anybody wants to ask any questions. So I've got a question here. Someone says, can we have the recording of the session? Yes. The recording of the session will be sent to you tomorrow, automatically by email. Somebody said, is there any reason for the parameters for the NASDAQ USD JPY? Guys, for the parameters, you're just testing different parameters until you find the ones which is appropriate for that asset. There's not a strict rule that these are the parameters you need to use, because every asset has different volatility levels, different characteristics, price characteristic, price action, price momentum. So we cannot say, it's this fixed parameters. What very simply I'm doing is I'm testing different parameters. Test a 200 bar simple moving average. Does it work well? No problem. Let's make it 150. Let's make it 250. And I'll test it until I find the one that fits well to answer that question. So I can't see any other questions, guys. So let's end today's session. Thank you for joining. Hopefully you found it educational. Otherwise, guys, enjoy the rest of your day. Take care. Goodbye.